Hi, I'm Mitch Goldberg with ClientFirst Strategy. What's weighing down on the market? The most succinct explanation that I can give you is that this is the classic example of the macro issues versus the micro issues. On the one hand, you have macroeconomic issues, the big picture stuff, the global economy stuff. That's the weak American economy, and in particular the weak European economy and the European debt crisis that they're going through right now. That's really the story of the day, so let's talk about that. You have these issues that are weighing down on the market, and the concern is not that stocks have done anything wrong, that there's something wrong with stocks right now. The concern is that the macro issues are so bad that the belief is they have to weigh down earnings, that earnings have to go down because of the weakness that can come from the macroeconomic issues. But, okay, so that's pushing stocks down. Pushing stocks up are the microeconomic issues. That means strong corporate earnings, incredibly strong balance sheets, cash-rich balance sheets. You also have very poor investor psychology, and you have what I consider the Uber theme that I like to talk about of the emerging middle class wanting to look and live more like us. They're buying Nike sneakers, they're drinking Starbucks coffee, they're eating McDonald's hamburgers, they're eating Kentucky Fried Chicken, they're driving Buicks and Cadillacs. They want to look more like us. So you have this theme overall that pushes stocks up. So every now and then when you have some kind of relief in the macroeconomic issues, you hear about some kind of relief with European debt or some relief in the Greek debt crisis, stocks go up. And then when the macro issues come back again in a negative way, stocks go back down. So you have this constant up and down, this seesaw motion between the micro and the macro. I actually believe, due to these macroeconomic issues, that earnings estimates will have to be cut, that corporate earnings will either stop going up so much or they'll actually taper off a little bit. But I don't think that will happen to the extent that it should match the sell-off that we've already had so far. What happened today is this. There was an agreement. Germany and France agreed that they want to keep Greece in the European Union. This is very, very important. It's a very bullish signal that the European Union is going to finally start to act as one cohesive unit. They're finally understanding the phrase, divided we fall, united we stand. It's very tough to get a quick policy response out of Europe because there are over 20 member states in the European Union. As Americans, we're used to our policy responses coming much quicker because we only have one Fed, we only have one Treasury. But there it's a little bit different. You have to get a lot more people on board. So in this case, they're finally agreeing to work together to keep Greece inside the European Union. It's significant because, again, you're starting to move toward that individual policy response, and that's why today, September 14th, 2011, the market went up third day in a row, okay, because you're starting to get some relief on the macro side. If we could get this black cloud to dissipate that's hanging over Europe, that alone would be enough to take some of the weight off the market and let the microeconomic issues come back into play. So that is what is going on in the market today, and I think that if investors stay in the train, hang around for the ride, I think they'll be well rewarded. Thanks, and see you next time.